Bob Knakal joins me here today. Bob, I really appreciate your time. And we're going to be talking everything from entrepreneurship, how to scale your business, but some pretty stellar numbers on Bob's end. He's in New York and he has sold 2,321 properties, totaling value of $22 billion. Yes, that is with a B. So, Bob, I really appreciate you giving us some insight here today.
Well, Jack, it's a pleasure to be with you. And, if you've been in business 40 years, those numbers kind of add up after a while.
Well, I don't know if there's a lot of people that can have it with the B. The billion is kind of startling, especially I know you're in New York and the property values are a bit different from where I am, but that's still a pretty startling number.
Well, thanks. Yeah, it's all just one at a time. That's the only way to get there is one at a time.
So we were talking a little bit about just before we hit record about social media and the growth there. So if you want to see what Bob is up to, I definitely check out Twitter, LinkedIn, and Bob has even graciously given us his email address, but we're going to save that closer to the end, Bob, so you don't get inundated with a bunch of emails.
Fantastic. No, happy to hear from folks. No problem.
So I'm curious, Bob. I know you said this is a career of 40 years, but $22 billion in sales, that many real estate transactions, you've had to scale your business to handle that type of workload. Can you talk a little bit to entrepreneurship and the mindset that's needed for that?
Sure. Well, I guess if we go to 40,000 feet, I would say over the years I've been very lucky. Could not have achieved those kind of numbers without, great folks around me, partners and associates and colleagues. And, you have to build a team. I'm a big believer in the fact that you figure out what you do best and try to do as much of that as you possibly can, and then find other people to help do the other things that are essential to get done, but that you don't necessarily have to be the one to do. I love to read a lot about successful people and entrepreneurs and how folks do things. And I really love the books written by Dr. Benjamin Hardy and Dan Sullivan. One of them is Who Not How. And the general thesis of the book is that of all the things you do every day, probably 20% of those things make you most of your money. And that's what you should be spending as much time as possible doing. And then the other 80%, you should either delegate to other people or don't do it all. So I think when you're thinking about scaling and growing your business, you need the help of other people. Another one of Ben Hardy's books is Who Not How, saying that when you ask yourself, how am I going to get this done? You're asking the wrong question. It should be, who am I going to get to do this for me, is the right question. And so
Right.
A lot of it is figuring out what you do best, trying to do as much of that as possible, and then delegating other tasks to other people that can do them more effectively and efficiently than you can.
Mm-hmm. One of those things that we're dealing with a number of real estate investors that listen to this podcast, and a lot of them they're kind of doing real estate investing as a side hustle, or unfortunately, I even classify sometimes as a hobby than anything else. But what I really liked, what I saw coming from your team, is the concept of how to start your small business with the intentions of expansion and those steps that are needed there. How does a person position themselves in order to, even if it's a one-man band, how do they make sure that they take those initial right steps to accomplish that?
I think it's having a vision and a goal for what you want to be. Another great book is Jim Collins' Good to Great. And what Collins theorizes is that the main difference between good companies and great companies is that the great company identifies something that they can or want to do better than anybody else in the world. And every decision they make, every strategic initiative, everything revolves around that one thing. And I think in the same way, an entrepreneur can think about what they want to specialize in. And specialization is really, really important in the real estate business. I think, if the best way to add value to a client is by being a true expert at something. So operate within an arena that's small enough that you really can know everything about it and be a real expert, but have that be large enough that you can make a good living doing it. But that specialization leads to an easy way to differentiate yourself from everybody else that's trying to do what you do. And that differentiation leads to a competitive advantage. And so I think as an entrepreneur starting a business, wanting to grow it, think about where you want to be in 5 or 10 years. Have an operating platform with systems in place that will allow you to scale. Have that operating platform and the guidelines by which you operate be implemented fairly for everybody, so everyone's on a level playing field. And then just keep going forward one step at a time, building towards your goal, trying to be the best at one particular thing. And we all need help. We all need people by our side, partners and colleagues, to help us get where we want to get to. But create an environment that encourages people, that allows people to express their desires and their abilities, and encourage them to do their very best.
Do you find that it's best to actually, when you're doing this and making these type of plans, or envisioning what that people should be like, actually going through the exercise of writing this down? And I almost picture it like a target, right? Like it seems like a lot of people jump into real estate, for example, with hopes and dreams, but they haven't taken the moment to, I don't want to say go through the process of a business plan, but at least writing things down. It doesn't become a target until you put it on paper.
I think you should have a business plan. I think every entrepreneur, every business person should think about doing a SWOT analysis, strengths, weaknesses, opportunities, threats. That will help you think about where you are, where you want to get to. Write down what your 1 year plan is, your 3 year plan, your 5 year plan. And it's working on your business. I often, if you read the stuff that I put online, I often differentiate business and working on your business. And I think it's important to do both of those things. Obviously, you have to work in your business to make money, but you also want to be working on your business regularly so that you can think about where you are, think about where you're going, where you want to get to, and determine the strategic objectives that you have, and then what tactics you're going to implement in order to achieve those strategic objectives. So, I think if you're not writing these things down, it's easy to lose track of them. And you certainly want to have measurable goals so that you can see how you're doing relative to your goals, each step of the way.
Yeah. One of those things that you mentioned earlier is focusing on the things that you're good at, focusing on us, and even finding a specialization is.
Jack?
Yeah, there you are.
Sorry, lost you there for a minute.
No problem. That's what editing software is for. So going back to what you were talking about earlier, finding that focus and possibly a specialization. With the amount of experience that you've had in the real estate world for the past 40 years, are you seeing anything trend-wise, some specialization that areas that might be underserved today that people could take advantage of?
Well, I think there are a number of things that are constantly changing in the real estate business. And I'll tell you, back when I started in 1984, our specialization was based on geographic orientation. We took a little territory, we called it, wanted to know every owner of every building on every block, really hunkered down, got to know those neighborhoods really well, and thought that market knowledge was a big differentiator. That was back in the day when publicly available information was very limited and what was available was not very good. So it was a big advantage to have accurate information by granularly digging into a particular niche. Today, I think the amount and quality of publicly available data is very significant. So I think product specialization is more important than than geographic specialization is today. But, I think the biggest opportunity in the market is to adapt to and adopt the utilization of new technology. I'll take you back to, again, 1984, sitting at my desk. I had no computer on my desk, no fax machine, no cell phone. And you think about how the world has changed so dramatically in the past 40 years. But I think that the extent to which the market is going to change over the next 5 years is even going to be more dramatic than the change we've seen over the last 40, based on new technologies, AI, et cetera. I really think the world is going to change, and I think the early adopters of that technology are going to be in much better shape than those that don't.
Do you think, you talk about AI and the like, have you started to see like some of those early adopters maybe using it, frankly, too much, in the fact that sometimes I've run into a few bots, if you will, that are leveraging the AIs, and you can instantly tell that there isn't a human behind that, and we're starting to lose some of that human touch.
Yeah, well, I think if you think about what the real estate brokerage businesses, and I'm a real estate broker, so I look at everything through that lens, you basically are constantly going through a funneling process. You get hired to sell a property, and you go out to 7,000 buyers. And then you have 300 that sign a confidentiality agreement. Then you have 100 that want to actually see the property. And then you have 30 that will bid on the property. You're constantly funneling things down. And technology and AI helps you get through that process a little more efficiently. And I think from the buyer's perspective, the buyer just wants to be made aware of that opportunity. I don't think they really are that concerned whether a human is calling them, a machine is calling them, as long as they're aware of that opportunity. And then once they progress to a certain point, then clearly they'll be interacting with someone live. But there is so much funneling that the whole process has to go through, that AI can be tremendously beneficial in that process and save a lot of time. So I've been adopting and trying a lot of different mechanisms to implement AI into my practice, and the trial and error, trying new systems out, seeing what works, what doesn't. But I think that the rate of change within that industry is so significant. I think it's really going to be unbelievable over the next 5 years.
Have you found any standout tools that you've run into so far?
A couple that I think are very, very promising. And so, we'll see how they go. Still haven't settled on one particular software yet, but definitely testing them out, experimenting, and, we'll see where we go with it.
You bet. Well, I know with your experience with commercial property, I would be curious as to what you see there on the horizon, or what we frankly, in my part of the world, we saw a pretty significant disruption with COVID and a few other things. But before we get into that, I just want to remind everybody, you can find Bob on the socials. Look for Bob Knakal. I'm going to make sure to have some of those links in the show notes to Twitter, LinkedIn. And again, we're going to be sharing Bob's email address towards the end of the show. But if you found some value in what we're talking about so far, share this episode with one of your real estate investor friends. So, Bob, going back to what I was talking about, being in commercial real estate, what have you seen? Have you in New York anyway, have you started to see people returning back to those commercial properties for employment, or is there a lot of places vacant because people are working from home? How do you foresee what's happening in the commercial real estate space?
Yeah, well, it's really interesting. I mean, the real estate market has been in a recovery mode here in New York for quite a while. And this recovery is playing out very differently than the last four big corrections that we've seen. I think it's very, very product sector specific. And you mentioned office buildings, people returning to work. Folks are coming back to work, but a lot more slowly than was ever anticipated. First people were hoping it would be after Labor Day of 2020, then after Labor Day of 2021, 2021. Then after Labor Day of 2022, it keeps getting pushed off. But folks are coming back to the office slowly but surely. I think there are a number of reasons for that. The learning curve for young people is completely flat when you're at home and you're just on Zooms. If you really want to learn, you have to be in that office ecosystem. Secondly, corporate culture. It's very, very difficult to create and foster a culture if people are not together, not working side by side. So I think there are a number of compelling reasons why people should be back in the office. That being said, a number of people are not. And so it's impacting our office sector very significantly. There is a big difference between Class A new construction, which is still doing relatively well, and B and C office, which is in some cases very challenging. So we have a number of folks that are looking at office buildings and potentially converting them to residential uses. It's getting to the point where the value of some of these buildings is dropping below land value, even if you take demolition costs into consideration. So I think we'll see some office buildings demolished to make way for new construction. But without a doubt, we have been in a very tumultuous marketplace. Refinancing risk is an issue. Values have been significantly impacted, and I think it's going to be very interesting to see how it plays out over the next year or so. We're hopeful that interest rate policy will change, and all indications are that it will as we go into 2024. But we had a significant shift in the market. Our correction in investment sales really started in October of 2015. We thought we were coming out of it in 2021. In fact, the second half of 2021 and the first half of 2022 were very, very positive. But the Fed started raising interest rates in March, started to really tangibly impact the real estate market in August and September of 22. And that started to exert downward pressure on pricing. And we're at the point where we hope we're at the bottom of this price decline, and things will start to get better as rates decrease. But it'll take a significant amount of rate decrease to shift the direction of the market.
Well, we're seeing, like in my market, we're starting to see some shift down. The Treasury or the Fed hasn't shifted rates themselves yet, but we actually have started to see some slight movement in the individual mortgage rates. How long does it take for you to start seeing some changes in the commercial mortgage rates?
Well, it depends. That's going to depend on what happens with each cycle. As I said, Fed started raising rates in March. We really didn't feel it in the commercial real estate business until August, September of 22. And so we'll see what happens. Fortunately, the Fed has been pretty good about telegraphing moves, so they seem to be built into the market before they actually happen. But we'll see. Hopefully the lenders react quickly and those spreads compress a little bit, which, in addition to the rates dropping themselves, will be helpful and will make borrowing less expensive for real estate owners.
So in the commercial area, then, it sounds like some of that office space might be a little depressed right now, but is there any part of the commercial sector that's flourishing that people should be aware of?
Well, I don't know if I would use the word flourishing, but I can tell you that I think retail properties in New York are on the upswing right now, mainly because they've been taking their lumps for many, many years. And the general perception is that retail rents have stopped going down. Leasing activity is picking up and investor interest is back. We're getting calls from investors looking to buy retail properties and haven't had those calls in quite a while. Also, the multifamily market has surprisingly robust demand, notwithstanding the fact that our political headwinds are very, very significant in our housing market. It seems like, every politician talks about wanting New York City to be more affordable for everybody, but yet every single piece of legislation that's been implemented or ignored since 2018 has done nothing but constricted supply and made New York City less affordable for people. So we have a little bit of a hypocritical politician class that says one thing but does another. But I'm sure we're not the only place that has that type of dynamic going on.
Yeah, that's unheard of in in politics, isn't it? Being hypocritical. You're talking to the wrong guy if you're going to go down that road. I'm I have some very strong opinions regarding some of this.
Okay. Well, I don't look at things as a Democrat or a Republican. I look at things as a real estatearian. And big part of what I do every day is try to figure out how public policy is going to impact my ability to sit at my desk and sell a building. And I think, what we're seeing now is that the correlation between public policy and the way the markets are functioning is there's a more high correlation today than ever before. And I would argue that as much distress as we've seen in our housing market, almost completely caused by housing policy as opposed to fundamentals within the real estate market itself.
I'm going to go back to something else here, Bob, because, with 40 years of experience being in real estate, I have learned that a lot of people's success when you get to the seasoned professionals such as yourself, a lot of this has to do with endurance and perseverance. Like you've really stuck it out through the good times, the bad times. Could you talk a little bit about the mindset associated with just sticking it out and how important that might be?
Sure, Jack. I think that's important. When I talk about the real estate brokerage business and, having had my own company for 26 years, I've interviewed a lot of brokers. I've seen a lot of brokers operate. I've seen brokers who have done really well that I wasn't expecting to do well. And I've seen brokers that I thought would be fantastic that have fizzled out very, very quickly. And I think there are three main characteristics that I see in the people who greatly succeed in the business. First is they're an expert at something. They have mastered one corner of the market. They know it better than anybody. They can articulate that expertise very easily. That builds a big track record, and they can easily differentiate themselves to create that competitive advantage that I mentioned earlier. Two is passion. You have to have passion for the business. You have to love it. When I talk to young people who are thinking about getting into real estate, I say expose yourself to as many aspects of the business as possible. Find out what you really love, what you're really passionate about, because no matter how good you are, you're going to have tough times. The market is cyclical. There are always ups and downs. When you're in one of those tough times, the passion is what's going to drive you through, let you get to the other side. And then the third characteristic is discipline. Discipline is incredibly important. A lot of what we do in our business is not glamorous. It's a lot of very fundamental blocking and tackling. Are you making your phone calls? Are you writing your content? Are you doing your email blasts? Are you doing your hard mail? Are you doing your networking? Very, very basic stuff, but you have to do it over and over and over again consistently. And in order to do that, you have to have discipline. And, I always quote Abraham Lincoln, who said that discipline is choosing between what you want now and what you want most. And it's having that combination of passion for it, loving what you do. I always say I feel very, very lucky that selling buildings is not only my career, it's my hobby also. But having the discipline to do the very bread and butter type of things, the blocking and tackling, as we call it, every day you have to do it, implement it, do it regularly, do it consistently. And I think those are the things that set folks apart who get to the top of the game versus just being another broker.
It's really important that you said that because there's, a lot of people that get into the real estate investing game for the first time. There's a lot of effort or very little effort spent on those type of persistent, consistent behaviors that you're talking about. In fact, a lot of people are seduced into getting into real estate investing to believing that it's easy, it's quick money, and it's easy to do. But I think what you're saying, if I'm paraphrasing correctly, is that this isn't a light load. There's a lot of work and effort involved in this.
Yeah, if I was an investor, and I tell folks who are investors or starting out being investors, I said, You know what? You look at a market like New York City, and you think that it's all controlled by the real estate brokerage community. Over the past 30 years, only about half of the transactions have been handled by the biggest 25 brokerage companies in New York. So half the business is being done by small brokerage shops or done principal to principal. So I tell investors, hey, if you want to get good deals, would you rather come to me with something I'm selling and have to pay more than the other 6,000 people I sent the deal out to? And you could say, yeah, I bought the building because I paid more than 6,000 other people were willing to offer. Or would you like to have a seller call you up and say, yeah, I'm thinking about selling my building, come make a deal, and you buy the building without it ever having gone to market? I'd say it's much more likely you're going to get a good deal in the latter scenario than the former scenario. So I tell people who want to invest, make up a list of owners of the properties you'd like to buy and constantly call them. And yeah, that's a lot of work. It takes a lot of effort, but ultimately, if you get one of those, you're going to probably buy the property at less than it's worth. And as an investor, that's what you ultimately want to do. But it does take a lot of work.
Yeah. Yeah, if you go to Bob's Twitter page, and like I said, I'm going to have a link in the show notes to your Twitter there, Bob. But I found kind of a quick nugget on here that says the most important call you can make is the one you don't want to make. Can you talk a little bit? Why did you post that?
Sure. Well, because I do. Delivering bad news usually revolves around those calls that you don't want to make, or you have nothing to say to a client. And I often say, you know what, don't avoid that call, don't hide from making it, just make it, deliver the news quickly, keep your client informed. The worst feeling you could have as a broker is, you've had a negative reaction from people or no reaction to a particular transaction you're working on. The phone rings and you see that it's your client calling you, and you're like, oh no. You don't want to deliver bad news in that way. You want to deliver the bad news proactively by calling the owner and being the one to initiate that interaction.
Yeah, I've definitely learned the lesson there where it seems like you actually start to create and imagine more drama than actually materializes. You always make it way worse than it will likely be if you just do it.
Man, deliver bad news fast. That's then you don't worry about it so much. And like you say, sometimes you imagine it's going to be a lot worse than it actually is.
So just to remind everybody, look for Bob Knakal. The last name is spelled Knakal. You'll find him, Bob, on Twitter and LinkedIn especially. And as promised, if you want to reach out to Bob directly, you can reach him at bob.knakal@jll.com. 3-letter domain, Bob. You must have bought that early.
No, well, that's JLL is is a big firm. We have 102,000 employees, so that was a great domain just to have 3 letters, no doubt about it.
Yeah, that's great. Well, Bob, this has been a great conversation. I'm not going to hold you up too much longer, but before I let you go, I do have those rapid fire questions for you if you're ready for it.
Sure, let's go.
What lie do real estate investors tell themselves and others?
There's nothing I can do about it. There's always something you can do. That's the biggest lie in sales, by the way, is there's nothing I can do about it. There's always something you can do.
Great, great. Do you have a book recommendation, or what are you reading right now?
Sure. Well, I mentioned the Dan Sullivan and Ben Hardy books. I think they're great. I actually have a list of about 20 books that I think are fantastic for real estate people, business people. If you reach out to me at bob.knakal@jll.com, I'm happy to share that reading list with you. But a lot of great stuff out there that will really help you, especially in our business, which is a people business, stuff on selling, human behavior, persuasion, a business. A lot of great stuff out there that I think your listeners will find of interest, and I'm happy to share that list with you.
Well, Bob, if you could go back in time and give your younger self one piece of advice, what would that be?
just go for it. Go for it and bring on more help than you think you can afford to have. Every time we've hired someone to take over a functionality that we were doing, we always saw a geometric growth in what we were able to produce because of the extra time that we had. So we were always very, very conservative with bringing people on, wanting to make sure we had the money to afford to pay them, et cetera, et cetera. But it seemed like every time we brought someone on, whether it was a director of HR or head of graphics or a CFO or a COO or anyone to take over a major functionality for us, the growth of the firm really exploded. So I would hire additional horsepower more quickly than you think you can afford to.
That's I hate to derail us there for a minute, but that's especially always of interest to me is the concept of seeing that as an investment versus an expense, especially as a small business owner. Is there any advice or strategies there that people should consider in
No,
order to
again, I
maintain
think
that?
figure out what it is that you do best. How are you most valuable to the company? And try to spend as much time as you possibly can doing that. Do other tasks have to get done? Absolutely. Somebody has to write the checks to pay the bills. Do you have to be the one to do that? If not, have somebody else do it.
What single strategy, process, or tool have you implemented that has had the most time-saving impact to your business?
Well, I think probably having an executive assistant and having them do all the tasks that need to get done, but that you don't have to be the one to do. I had an assistant when we sold our business in 2014 to Cushman & Wakefield. I had two executive assistants, and I was asked by some of the folks at Cushman, well, what do your two assistants do? And I mentioned a whole list of things. And one of the things I mentioned was that they pick my shirts up from the cleaners. And they said, you have your assistant go pick your shirts up from the cleaner? I said, yeah, here, do the calculation. This is what I earn per minute. Do you want me to take 25 minutes to go pick up my shirts and drop them at home? Or do you want somebody else to do that for me? And they said, oh, okay, I get it.
Well, Bob, is there a question or concept you wished we would have covered here today?
No, I think this was great. Covered a lot of great stuff. I think that, the real estate business is such a great business. I think it's the greatest business in the world, whether you're a broker, an investor, a lawyer, a banker. It is fantastic. It's a people business. And I think, especially younger people tend to get wrapped up in doing everything by text or email. But we can't lose sight of the fact that this is a people business. Get out there, meet people. Every year, my goal is to attend 261 networking events a year. There are 261 working days a year, so I try to do one every day. And that gives you the face-to-face interaction that you want to have with people, fosters those relationships, strengthens relationships, and will get you in the way of a lot of information that could benefit your career.
261 networking events a year. Wow. That says a lot right there, Bob. Thank you so much again for your time. I hope you'll consider coming back again sometime. Again, it's Bob Knakal on all the socials. I'm going to make sure to have as many of those links in the show notes as possible, but thank you again, Bob.
You got it, Jack. It was great to be with you, and I wish the best of luck to everybody out there.